world is changing fast. New technologies are impacting how we think about products, services, and the way we live our lives. Nowhere is this trend more present than in financial services, where new business models and customer expectations are changing our conceptions about banking, finance, and the very nature of money. Welcome to Rebank, a visionary podcast about banking, fintech, and the future. The future of banking is here. Hello and welcome to Rebank. I'm your host, Will Beeson. Today we're joined by Mike Packer, partner at QED, and Michael Sidgmore, partner at Broadhaven Ventures. Mike and Michael are active investors in Latin America with collective portfolio companies including Credijusto, Loft, Nubank, and many more. In this conversation, we discuss market dynamics, nuances, and opportunities in Latin American fintech, and much more. For all of our past episodes and to sign up to our newsletter, please visit bankingthefuture.com. Thank you very much for joining us today. Please welcome Mike Packer and Michael Sidgmore. Michael Sidgmore and Mike Packer, welcome to Rebank.
Thanks for having me.
Yeah, thanks for having me as well. It's certainly the best name on the podcast.
Well, it's great. It's great to connect with you both. Michael, you and I have had the pleasure of speaking before. I think it was last year in beautiful San Francisco, way before any of this remote by default lockdown type environment set in. I'm glad we were able to reconnect, despite the fact that it's via internet this time. And thanks for looping in Mike. So it sounds like you guys know each other and maybe have worked together, have looked at deals in the past. Michael, how do you and Mike know each other?
Yeah, so we have looked at deals together in the past. We're mutual investors in a Mexican small business lender called Credijusto. That Mike was a Series A investor in. We were a seed investor in, and I just feel lucky that one of the best, if not the best, investors in Latin America is involved with Credijusto, and that we've worked together on one deal and hopefully more, and have looked at a bunch together as well.
Great. Well, Mike, it's a huge pleasure to have you here from QED, one of the premier investors in the fintech space. Can you just introduce yourself quickly and tell us a bit about your focus?
Absolutely. Yeah. Thanks again for having me. So I have been with QED for about 4.5 years now, and the last really 3 and change almost fully focused on LATAM. Prior to QED, I spent about a decade at Capital One, focused mostly on credit businesses. So as a kind of operator, a lot of times in credit cards, as you can imagine, but also point of sale finance, retail partnerships, and small business lending, and really wanted to get to the other side of fintech, and ended up stumbling into QED. In our LATAM story, which I'm happy to go into more, but is kind of an accident where we had an investment prior to my joining in Nubank, which is of course an amazing story, and through a prior relationship with David Velez, Nigel and Morris and Frank Rotman had decided to take the plunge into Nubank. And through that, we were really just introduced to the region. And as I kind of alluded to a little bit ago, about 3.5, 4 years ago, QED made the decision to really look at LATAM as a focus. And so myself, Bill Salufo, and now Lauren Morton have been attacking the region, managing a portfolio of, I think, officially 20 companies now, mostly in Brazil and Mexico, and continuing to look at the region with pretty opportunistic eyes and pretty excited about what we see ahead.
Great. Well, I want to come back to that piece and maybe hear a little bit about how QED got increasingly involved in Latin America over the past few years, because I feel like it sounds like you guys were very early, but to some extent, maybe the industry has followed. So that might be insightful. But real quick, Michael, can you remind listeners what you're up to? And I'm sure you have some updates since we last spoke.
Yeah, absolutely. So So I'm a partner at Broadhaven Ventures, co-founded the firm with my partner, Greg Phillips, who has built one of the market-leading Fintech investment banks and advisory firms called Broadhaven Capital Partners. We started the fund in 2016 really with the idea to be an early-stage Fintech investor globally. Majority of our focus to date has been US and LATAM, and we've also invested through prior investments in Europe and more to come there, and then recently invested in a Japanese digital bank as well. So really look globally, like to be investors early on. We tend to be pre-seed and seed investors. So one of the first institutional checks into a business, and like finding things outside the Bay Area and New York, which is really how we ended up spending a lot of time on LATAM. We have 6 portfolio companies in LATAM at this point, 5 in Mexico, 1 in Brazil, and really like to invest early in the ecosystem and then, bring companies back to the US for kind of later stage round series A's, B's, and C's, which I think is something that we can touch on because you're increasingly seeing US VCs spend time in LATAM. So I think that's been an interesting topic of the past year to year and a half or so.
So, Mike, you must have been one of the early VCs on the ground, so to speak, in LATAM, at least US VCs, if you've been active in that space for 3.5, 4 years. Can you talk a little bit about what the environment looked like at that point and how you've seen it develop since then?
Yeah, I think it's a really good question. Having come from a place, prior to my experiences 4+ years ago at this point, having little to no background in LATAM, and then starting to look to the region for businesses and fintech investments, we're still a little bit young and new is how we think about it. But kind of to your point, is certainly from a U.S. perspective, I think we were one of the first to be looking at businesses and starting to get involved in things. And again, I alluded to it in my intro. It was almost pure accident, and thanks to David Velez from Nubank for making it happen. But I think one of the things that we were able to do in that time is kept the core DNA of QED of trying to be really specific and strategic about where we want to invest and being kind of operationally involved and trying to be kind of helpful with the companies. And through that, we really developed a pretty deep network early on. But I think in terms of the US VCs, we were certainly in the market on our own is how we felt, which was exciting because we got to meet a whole lot of companies. But there were definitely local funds at that time that were both emerging and had been around for a while, who we've had a bunch of experience with. And I think as the years went on and some early success came on, and I think the ecosystem continued to develop. And by that I mean more companies were formed, more events started happening. You've seen some good results. Then we started seeing a little bit more activity. But I often joke when I'm talking to my friends in New York or San Francisco that I feel like a salesman for the region as I'm trying to convince everybody to come down and join us. I think we'd welcome more capital and more expertise and more U.S. investors in the region. But it has been picking up over the coming years, just in terms of both funds that have been investing, but also funds looking. And so I think that in terms of where we got maybe a little lucky in this part of the cycle for being a little early, but it's still has some room to run in my opinion.
Maybe that Nubank piece is an interesting place to kind of lead into maybe a broader question. So I'd have to kind of jog my memory, but we connected with David, must have been a year and a half ago now. Phenomenal story, extremely smart and qualified founder. That concept, like, okay, we're going to launch app plus credit card into a market that we feel is ripe for this. And he was just spot on, and the thing has exploded. Like that was, in many ways, kind of what digital banks in the US and the UK and parts of Europe were trying to do, circa like 2012, 13, 14. And it didn't really play out that way because it kind of turned out that actually the market was really saturated already for banking services. in developed markets, and actually there was some inertia around switching, and actually maybe there was more trust in incumbent organizations, even among younger, like more digitally oriented users. But that doesn't seem to have been the case in Brazil. Do you think that Nubank case study is the exception or the rule in Latin America? Is that what potentially makes the region exciting, is that there are truly disruptive opportunities?
Yeah, I mean, I think in part, right? So, comparing to a market like the US, you have vastly different competitive dynamics, both at the kind of incumbent, kind of current financial services, but also in terms of startups, right? And so, when we looked at Brazil from a broad perspective, right, you see extremely high return on capital in the banking industry, spreads that are as high as anywhere in the world. You see a very underdeveloped digital ecosystem in terms of just pure investment that the banks and financial institutions have made, and not a very competitive environment going with the kind of high returns, right? You have a small number of banks catering to a large portion of the market. And by the way, that market is only a portion of the overall total market. So you have a huge kind of underserved and unserved populations. And so I think when you put all of those things together, I think you do find that there are Nubank-like opportunities in the market. Now, Nubank is its own kind of animal. I don't even think that David, could have predicted anywhere close to this type of success, being in the right place and right time. But they did everything right, and they got more response than they expected. Well, certainly than we expected. I don't want to put words in his mouth, but it's just that story in itself, I think, is incredible, and certainly we think there are opportunities like that. But I do think this kind of difference between the environment they were going into is a huge part of both why Nubank did well and why I think fintech opportunities, still exist. The other thing that I think Nubank did really well, and I'm very biased in this statement, both as a former credit card executive and as a current investor in Nubank, but they went after the most profitable consumer banking product on the planet and made it work, right? And so the unit economics, profitability, just raw ability to create returns in a credit card versus deposit or savings led strategy, I think is much different too. And so they were able to kind of go into that strategy and get that right. And so I think that, again, whether it's the high margins generally in the market, whether it's going after the right mix of profitability versus growth in terms of growing the company, or whether it was just an excellent team with an excellent strategy, you put any of those three together, right, and you're going to come out with something great. But at a really, really high level, yes, we agree that there's all kinds of opportunities that still exist in the market because of those type of dynamics.
Michael, looking at the kind of opportunity in the market from a different angle, almost, you guys are going to have to help fill in some of these company names. It's admittedly not a geography that I've followed all that closely over time, but maybe the company called Rappi, which is maybe originally Colombian, and it was kind of like delivery or app-based, source an individual to bring you, whether it was food or supplies or even cash from an ATM. Similar, I guess, to the Uber-style model of starting with ride-hailing and moving into financial services, like kind of using some sort of really powerful entry point into consumer behavior that isn't finance-related, to then build a very extensive and very successful fintech type offering around that. That's a trend that I understand may be visible in Latin America. Michael, do you have any thoughts or any sense of whether that's true, and if so, any examples of companies that are doing that well?
Yeah, it's a really good question. I think both you and Mike are highlighting two views that we hold on Latin America as a opportunity to invest in financial services companies, and part of our fintech theses. So one, which you're alluding to, is can there be non-fintechs that become fintechs? We believe that there can be. The reason why is because in many respects, they're meeting a customer at point of need. So in Rappi's case, delivery, they're doing on-demand delivery, not too dissimilar from a DoorDash in the US. And then you can think about what kinds of financial services products could be offered to both sides of that marketplace, the end consumers as well as the Rappi delivery people. Those in many cases are people who are not banked or underbanked. So opportunities for financial services on that side of the marketplace. And then on the consumer side as well around payments, e-commerce, et cetera. So that I think is certainly an interesting trend in Latin America. The question there is still, can a super app platform work in Latin America like it's worked in Asia, both on the non-fintech side? So, there's been messaging platforms like WeChat in Asia, things like that have done very well to then expand into financial services, e-commerce, et cetera. There have also been delivery apps like Gojek that have done that as well. And then also on the financial services side, you've seen in Asia the rise of financial services super apps. So digital banks in Korea like Toss, which as a venture partner at Goodwater, I'm involved with, that's a business that has built a kind of financial super app for Korea. So can the same happen in Latin America, either starting with financial services? And if I had to make my bet, I think the company Mike alluded to, Nubank probably is the best bet for a financial super app. And then if you're thinking about kind of outside in fintech, so can a Rappi do that? We're investors in a business called Covey in Brazil, which raised $30 million last year in a Series A from GFC. They lease cars to on-demand drivers in Brazil and Mexico, so Didi and Uber drivers, and they're enabling those drivers to get access to a car so they can drive for Uber or Didi, and then lease them on a weekly basis, where they, in many cases, would otherwise not have a chance to access a car because they can't access credit. So then you could think about banking them or serving them through financial services products in other ways. I think that's an interesting kind of thesis as a wedge into fintech, and those people need the products. So we certainly see that to be something that's interesting in Latin America, and where we've actually invested in a few different businesses, Covey being one of them. Nowport's a digital freight forwarder, somewhat similar to Flexport in the US, as a business that meeting an exporter or an importer at a point of need, solving a problem of tracking shipping. And then you could think about kind of expanding from there and offering other products that meet kind of the needs of their kind of day-to-day financial operations. So we certainly like that trend. And I think the other trend that you both alluded to in your question is, can there become platforms that end up being bigger than just a single verticalized solution like you might see in the US? And I think that's certainly the case in large part due to kind of under-penetration of banking services by the incumbents. There's a ton of room to build horizontal platforms, kind of like Mike alluded to. And we see that in both Brazil and Mexico, where you can build either on the consumer side or the SME side, platforms that serve the needs of that customer in multiple ways. So, you might end up seeing, a business that ends up being a Brex plus an accounting software plus a Cabbage all rolled up into one business. Whereas in the US, you'd have three standalone businesses that could be multi-billion-dollar businesses.
So, Michael, there you kind of ran through some of your investment theses around LATAM. Mike, are there any specific theses that you guys are kind of pursuing in the geography?
Yeah, we take a pretty detailed view of the fintech market, and I think we are still very much open for business. I think anything fintech, because if anything, we're very happy to be surprised, especially in a region where we're not on the ground necessarily by models we haven't thought of. But that said, I mean, one of the things that Michael alluded to, so companies that are able to add financial services into their offering, we like that as an example. This kind of idea of being able to, own the customer, own a significant transaction or a significant portion of business in a time of need, and being able to tie financial services into that. We think that's very interesting. We've made a couple of investments in the real estate prop tech space, similar to that in Quinto Andar and Loft in Brazil. So companies that are dealing with primarily a real estate tech or prop tech platform, but adding financial services or financial services like components to that to enhance their value proposition. So we're very excited about that as a trend. And I think the other side of that is, how do those companies actually deliver the financial services? So what are the picks and shovels, so to speak? What's the infrastructure that you use to actually develop financial or fintech solutions for your customer, if that's not in your core DNA? I think this is something we're starting to see really happen in Brazil. A lot of activity, kind of everything from banking as a service to fintech as a service to more specific payments as a service and everything in between. We think is very interesting and completely underdeveloped at scale. This is I think a market that should continue to expand because of the trend that Michael said. And I think the last one I'll just kind of call out here that we've been really focused on and interested in, but kind of confused at how exactly to play it, is e-commerce. So, e-commerce in Latin America is 4 or 5% of retail sales. Is actually probably a lot higher now, given the COVID metrics, especially during the COVID months when you have both the numerator and denominator effect. But this is a number where I think it is inevitable there's going to be a tailwind in e-commerce in terms of just raw transaction activity. And so whether it be payment services or other types of infrastructure, or things like lending solutions at point of sale, or buy now, pay later, or frankly anything that helps enable e-commerce businesses do business better. We've been very, very interested in that. And again, it's not a novel tailwind. I think this is something we've been talking about for years, but the kind of recent COVID environment has put a magnifying glass on it. And I think we're going to start to see some real activity there. So those are a few that we're pretty excited about at the moment.
We talked to Clay Wilkes, the founder of Galileo, recently, so great business and has really been an accelerator of a lot of U.S. Digital banking. They've recently expanded to Latin America, and I think view that as an important part of their strategy going forward. How do you, Mike, just on that topic of banking infrastructure, how do you think about early stage companies or kind of purpose built startups that are looking to provide these sorts of services, maybe in markets where like either digital banking or payments or some sort of like payments enabled e-commerce hasn't necessarily been present before, versus incumbents in those markets who have seen what's happened in other geographies and realize that being quick to digital would be beneficial, and perhaps being a bit more aggressive in terms of getting there?
Yeah, it's a great question. I mean, I personally would much rather find the early stage startup in the region, personally. But I'm sure there are pieces of Galileo's system that crosses borders, right, in terms of their product and offerings. And I think where there are that type of cross-border synergies, I think you will see real pressure from that type of entry. I don't know which one is better, so to speak. I mean, we've kind of, separating from the Galileo specific example for a second. I mean, we have been very cautious in our understanding or approach or learning in the region, and have been very biased to companies that are homegrown in LATAM. We just think I personally think it eliminates some variables of uncertainty when you have a team that understands the market, understands local kind of nuances, that's well networked, it's able to kind of maneuver through the market. And so I think broadly that's been our bias. But again, I think at the same time, like, we don't want to see anybody really reinventing the wheel. And so there are a number of companies I'm talking to that are also talking to Galileo, and I think that they should totally look at that as an option as a user or a buyer, because there really is no other option. And so I think it's going to come down a little bit to timing and a little bit to some of that nuance of how the products will cross borders and kind of will be able to adapt or perform in these other locations.
Do you have a sense of how proactive incumbents in, retail or banking or payments are being in terms of, pursuing the digital opportunity?
Yeah, I mean, I'll give my perspective, and Michael, feel free to chime in here. I mean, every kind of country in LATAM is a bit different, so it's hard to generalize. But I think things in Latin America are at least 5 years, maybe 10 years behind what we're seeing in the U.S. in terms of just the sheer amount of kind of momentum and activity of the incumbents. The net result of that is probably not a real 5 or 10 years behind, because things have gotten easier. They can learn from the regions and all of that. So I think you're starting to see activity. You're starting to see some catch up, but you're not seeing anything really revolutionary. And, again, I don't think it's any fault on those institutions, because they have, significant market share in their markets. They're, driving good returns. Again, recessions and COVID notwithstanding, creates a whole bunch of different impacts here. But the kind of digitization of financial services has been happening just at a slow pace, and a pace that's been behind the U.S. I think we're seeing some signs of things picking up across a few countries. Companies getting more involved with accelerators, trying to invest, actually buying fintech solutions as a kind of commercial user. And we're seeing kind of increased likelihood of adopting those types of things. And we're still waiting for things like M&A, things like really big. There's been some really big rollouts from incumbents in Brazil, but I think it's still time will tell how successful they've been. So it's a bit of a mixed bag, but you're definitely seeing increased activity.
Yeah, I think to add to some of Mike's points, I think the one I would highlight is the local players will likely win, and in large part because you really have to tailor the solutions to the region or even the specific country. And I think that is more difficult for people from the outside trying to come in. And that's why I think it's also so important to be on the ground. I think I give a lot of credit to Mike and the QED team for creating a completely separate LATAM team that can be on the ground in Latin America a lot. We've felt the same way, that the way to understand the region is to be in the ecosystem and spend time there. Just one example that's kind of striking is that I think in Mexico, the number is something like 60% of Uber rides are paid for in cash. Now, maybe that'll change at some point. I'm sure it will, but just think about what that means for the way people think about payments, the way people think about living in a cash-based economy, what that means for how they spend money, how they transact with merchants, et cetera. And then also on the other side, think of how Uber had to figure that out in terms of how they had to think about payment acceptance, how they track how much money they're making, how they put that aside to pay for taxes, how they design their app. There are so many second and third order effects that you really have to think about when you understand what the ecosystem is like. So, I think that history may not repeat itself, but it's going to rhyme. But it'll rhyme in terms of winning from local players. So you might see the quote unquote Brex for LATAM or the Plaid for LATAM or the Open Door for LATAM, but they'll be won by local players, not by Brex necessarily coming in or Plaid coming in, because you have to tailor it to the ecosystem itself.
Picking up on that a little bit, Michael. So you personally have experience investing in U.S. companies and Latin American companies. I think you mentioned European companies and even Asian companies. Are there any specific considerations that you have in mind in evaluating a LATAM investment that you don't in some of those other geographies?
Yeah, it's a good question. So I think there's the things that you look for in every founder and team in terms of kind of them and their vision, their background, the product, the market, and the market size and the opportunity pain point they're solving. I think where we spend a lot of time with founders is one is just understanding the local pain points. So that ends up being a really important thing, is understanding what are the local problems that they're solving and how might that be different. Because then when we think about, what are they building? Will they will they beat incumbents or will they beat others who could come into the region who are very well capitalized? So that's one thing. I think the other thing we tend to look for is, can this founder and team figure out how to grow and scale such that they can raise later stage rounds of capital, most likely from VCs either who are much bigger in size and scale. So groups like Mike and QED, who have a larger fund, or Kazek in the region who has a larger fund. They just, I think, recently raised a $600 million fund. And then from US investors as well. So I think one of the things you've seen happen in Latin America more recently is that there have been a number of LATAM startups go through Y Combinator and other accelerators. And I think in part, a lot of founders are doing that because they want to, figure out, get that stamp of approval from YC, B, get trained and coached on how to pitch to US investors, and C, be exposed to the US investor market. Mike mentioned that a lot of US VCs are coming down to LATAM and have been kind of increasingly so. So I think that's something we also look for is can this team, be investable by growth stage investors if and when they need that type of capital.
Mike, if you think about those 20 or 21 portfolio investments that you guys have made, are there any companies there that, I don't want to say that stand out because I'm sure they're all phenomenal companies, but that might be illustrative to talk about, in terms of for what they're doing in their specific market, that might be interesting for U.S., European, or international listeners?
Yeah, I mean, I think there's probably a number of them. One of the more interesting ones that we're working on right now has been Loft in Brazil, which kind of started out kind of like an iBuyer, so similar to the open door model. But what we've kind of seen in their evolution over the couple years that we've been invested is the ability to continue to look at other problems in the value chain and then build kind of incremental pieces of the business around that. And so instead of being just a pure kind of iBuyer in the market, starting to look a lot more like a real estate marketplace, or starting to look like kind of a full stack buy, sell real estate platform. And I think the reason why I think that's instructive or illustrative is similar to some of the themes we've been discussing here, is that the opportunities across so many industries because of the underinvestment in technology are huge. And some of these things are things that may seem somewhat straightforward from the outside, things like digitization. But in the case of Loft, they basically have to rethink the concept of title insurance because of the way that notaries work in Brazil, or kind of rethink the role of brokers in terms of how they interact with brokerages and agents. And so there's just so many problems when you get in and start in on some of these markets that they continue to look interesting. So I think that has been a really interesting company to watch. And just another one, just really quickly, which I think is interesting because it's a little earlier and we don't quite know the answer, but we did an investment at the end of last year in a company in Mexico called Fairplay, which is kind of a revenue funding model, lending to e-commerce businesses based on what their marketing spend is and kind of getting paid back depending on the returns on their marketing campaigns. I think that company is really interesting because of the e-commerce theme we've been talking about, but just the intersection of so many things, right? So you have kind of e-commerce, you have that whole sector moving and optimizing and perfecting digital advertising, and in a lot of cases just starting. You have buyers who are kind of coming more and more online, and you have the whole providing capital to different size businesses. And every time I have a meeting with that team, they're learning something new about a different kind of segment or target of that market. And again, you just see how vast the problems are. And again, as I said, we don't know how that one ends up. I'm quite excited about the team and what they're doing. And of course, very biased because I'm an investor in the company. But I think just the nature of the number of problems that you find, assuming you can get into the right focus and the right amount of kind of resources on specific problems, your chances go way, way up. And so those are the types of things that we really like to see are, entrepreneurs uncovering sometimes small problems that lead to much bigger problems. And then I think in LATAM, you can start to pick away kind of adjacent markets, probably similar to the Fintech, financial services add-ons that we were talking about earlier, that concept of, non-financial services companies adding Fintech solutions.
All right, guys, to wrap up, I'm interested in your predictions. No, not predictions. Your expectations for the future of LATAM Fintech over the coming years. Michael, do you want to start?
Yeah, I'll start with that. I think it's a really good time to be a founder in Latin America. There's a lot of VC capital in the region, both from regional focused funds raising larger funds because they've had some good proof points and want to raise bigger funds. Companies are raising larger rounds, as well as some of the big regional players. So the larger funds, brand names have bigger funds, and then U.S. funds coming in. So there's a lot of capital. I think there's wide open markets in many areas of fintech to build market leading brands. So I think there are certainly some of the most innovative incumbent banks in the world that have a presence in places like Mexico. So like BBVA, Santander are both very innovative banks, but they also don't necessarily need to bank a large portion of the customers in Mexico. So that leaves room for fintechs to take a lot of market share and for everybody to maybe not be happy, but everybody to exist and exist in a big way. So I think that you could see new brands in fintech emerge. I think, Nubank, which Mike mentioned, is certainly one where just rolls off the tip of people's tongues. Like this is a financial services brand in Latin America. We're probably not, if we're not there already, we're probably not far from it. So I think that, those are things we'll see happen in the marketplace. And then I'll say something else. Mike probably won't, but I think that we're seeing the rise of these larger regional funds. So like Kazek, QED, Monashe's raising bigger funds because they've done incredibly well and invested in a lot of the unicorn businesses in the region. I think it's also a great time for those funds to really build their brands as the Sequoias and benchmarks of the region, where founders have been going to them as the first port of call, but I think will continue to do so in many respects, just because they've proven out great track record. And it'll be interesting to see whether or not US VCs post-COVID spend as much time in LATAM. So I think there's a huge opportunity for the kind of regional focused VCs that are larger in size and scale to really build out their brand and just continue to perform really well.
Mike?
Well, thanks, Michael, for the shout out there. I'm not sure we deserve to be in the company of the others who've spent more time there, but we're certainly very happy and humbled by our experiences so far. I think in terms of broad predictions, I don't like to do predictions well, but you put me on the spot like this, I have to say something. So look, I think I agree with Michael that it's a good time to be an entrepreneur. I think it is that there are lots of opportunities. I think the reason why now is a good time, or at least over the next year, I think it's a good time. I think it's going to be a tough market given the macro impacts that we're seeing over the last few months. And I think it's going to be a tougher market, which I think is going to drive out a lot of competition. Banks are going to retreat. There may actually be less capital for a period of time, but I'll continue trying to recruit all our friends to come and look. But I just think that now is going to be a great time because the ecosystem's developing. You have infrastructure that's starting to develop. It's easier to start a company than it was 3-4 years ago. And so I think for all those reasons, I wholeheartedly agree it's a good time to be a founder. The other thing I'll say is a bit of a prediction. I mean, I think Brazil has been Brazil Central Bank specifically has been one of the most forward-looking banks in the world on fintech. I think they've done some really great initiatives in terms of getting fintech companies licenses to operate in payments and lending markets as examples, and also the way they've been leading on open banking. Of course, they're on the open banking side. They're taking a lot of things from Europe and the UK. But I think that combination of things in Brazil is going to create an explosion of some version of whatever fintech 2.0 or 3.0, whatever cycle you think we're in, down in Brazil. Because I think that the ability to connect all the ecosystems with the central bank, kind of encouraging the innovation, is going to create something really, really interesting that I certainly can't predict, but I am actively trying to predict and look for things in that space.
Fascinating. Excellent. Well, guys, look, I really appreciate your time. Huge pleasure to connect, and I hope it won't be the last time. Congrats on all the amazing work you have been doing in Latin America over the past few years. It sounds like you're in really exciting positions.
Thanks so much for having us, Will. I really appreciate it. Always happy to talk about this topic. It's certainly an exciting time.
Michael Sidgmore and Mike Packer, thank you very much for joining us today. Thanks for tuning in to Rebank. If you like today's show, reach out. Follow us on Twitter at Rebank Podcast and join the conversation. For more on banking, fintech, and the future, check out our regular content at www.bankingthefuture.com.